It's Monday and time for the Back to Business podcast, featuring Calgary's industry leaders. Welcome today's show host, Kim Hayden.
Today's guest is Darren Dansereau, the CEO of QV. He shares his journey, community impact, and the tangible values he finds in how he leverages and builds and grows individuals' money and large corporations. So, you know what? Stick tight. This is a conversation worth listening to because it may be the one that grows your business strategy. But first, our land acknowledgement. We here at the Calgary Petroleum Club, in the spirit of reconciliation, honor and acknowledge that the land on which we learn, work, and live is Treaty 7 region of southern Alberta. This place is a traditional homeland for the First Nations and Métis peoples, and today we all are part of this treaty land. Alrighty, Darren, welcome to the show.
Thank you very much for having me.
I am excited to learn. I feel like this is going to be a real learning opportunity for me because as the CEO of QV, you have a far different kind of insight to business and navigation of moving money and moving all of these aspects around that I haven't been privy to as somebody that's more in that SME space. I would love to be bigger space, so today maybe I'll learn the inside secrets and how to invest and get me there. But what I'd like to do is first start with kind of building a overview of who is Darren and kind of what is a bit of the journey that has gotten you, your core mission, your philosophies around building to where you are now at this high level of CEO for QV.
Well, I'd say I don't want to start too far back, but I'm going to, and then,
Awesome.
I'll move quickly. So for me, the first thing that really got me into this business was grade 10 economics. My teacher put up on the screen the supply and demand charts, and to me that was it. That to me was a very clear explanation of how certain things work. Not how everything works, but how certain things work. And so from there, it was learning about investments and learning about portfolio management. I took a degree in finance at the University of Alberta in Edmonton, where I grew up, and then worked in a number of different companies there, and then moved to Calgary about 20 years ago. Where I started was, just thinking about investments and thinking about business. And for me, I've always been really interested in learning. And the investment business, you'll never figure it out.
Well, it's always moving.
It's always moving. It's always changing, which makes it really interesting. And once you think you have the economy kind of figured out, then something changes. And so that when people ask me, why do I like this business? It's because it's always changing. And I was in banking for a little bit. And why I say a little bit is because once you do a number of loans and mortgages and investments, it's very similar. So I was in a branch for 18 months, and then I moved into investment counseling, which is what we do at QV in terms of high net worth investments.
Amazing. And now this is totally off script, so everybody knows we spent a long time, but I do have a question. You did just mention, we talked about how fluid it is, how it's always changing. Do generations impact that? Does their consumership, their usership, do the generations, like Gen Z moves at a different rate or different pace than the boomers? Does that make impact?
I think it does have an impact. And a good example that people speak about in this space, in the investment space, is how interest rates have changed. So if anybody on this podcast has talked about or has bought a house in the 1980s and you're paying 14% interest rates, why was it 14%? Because the demand for mortgages was very high. And as that generation of people have moved through, you've actually seen interest rates come down. They're starting to move up a little bit here, but you're seeing a generational change. That's just one example, is interest rates and the baby boomers.
Now, I'm probably going to get, somebody out there is going to get mad and call Glenda. Don't call Glenda, call me. I personally felt that we were sitting way too low on all these interest rates for way too long. So I'm actually glad to see that we're recognizing the value of our dollar again by having some sort of recognition around that. So I'm glad you brought that, because that's something that I talk to a lot of people about, is understanding the evolution and why it was there and where it's at now, because I've got the real estate background. And so I've been through this whole cycle and understanding the value of money. And that you learned the value of money in grade 10 in economics, and this is what spurred it on. This is really saying something for your recognition and respect for leadership and learning.
Yes.
I think that's I bet you, I just picked up on that based on that teacher. What was that teacher's name? Do you remember the teacher's name?
I can picture her face, and her last name starts with an S, but I can't remember.
Yeah,
so this was at Holy Trinity High School in Edmonton.
Okay, so we have to say big shout out, thank you, because that when we talk about that diverse career, you've had this. Can you put your career path to where you are today, so people can see the start to the position today? Can you just track that for me?
Yes. So when I came out of university, there was two options that I had. The option was going into commercial banking or to go into Canada Trust. There was a place called Canada Trust before TD bought them. And in there, you could do small commercial lending and investments. And so I really enjoyed, I went to Canada Trust because I wanted to see all of them to see, which was the most interesting to me, because I talk about investing in portfolio management, but whether you're in commercial banking or whether you're in an actual investment management, buying public companies, they're fairly similar. You're doing analysis of businesses. And so once I moved from a branch, then I moved into investment counseling, because then it was more related to investments. And once I was in the investment counseling area, the next thought was that's an excellent job and something I could see myself doing, but I wanted to learn a little bit more about how you select the securities. And so I worked at Alberta Investment Management Corporation for 5 years, where I worked on helping to manage the pension plans, the endowment funds. So, for example, the Heritage Fund. So there was a large team, and I was one player there, but I worked in our Canadian large cap strategy there. And after that, I really was looking around for a company that would allow for a smaller organization, because AIMCO is quite large, a smaller organization where I could have more of an impact. And so when I joined QV Investors in 2006, there was 8 of us.
Wow.
And now there's about 35 of us. And so it's been, so for me, you go to a small firm, you learn a lot of different things, because there isn't another department that does that. You do it. Or that person next to you does it. So it's a lot more just trying to figure out how things work, and things need to get done. And there's only 8 of you, so somebody's got to do it.
And I'm going to guesstimate that in today's current rate of exponential growth within technology, that's making some positions easier to navigate and other positions harder to navigate. Does that impact anywhere you're at, or is that more on the potential growth of the company through, we're seeing all these resource tools that are becoming everyday pieces, like through AI and such? Are you touching on any of that, or?
So I'll go back a little bit further and say, when I first joined, the way we put trades in the system, when you look at it now, is so inefficient. There's just all these keystrokes you had to do. Now, as we all know, technology is so much easier to use. So I think we've seen an evolution, and that evolution has continued. So we look at AI, and as an example, was looking at a company today, and I can easily put into Google's Gemini, how many stores does this company have? And right away, it breaks it down. So I didn't have to go to the annual report. I just asked AI, and it told me. Now, we have to be careful, though. We have to make sure that is accurate.
Do the due diligence to cross-reference. Yeah.
So just taking a look and going, right, it is, because I figured I knew what the number was. It confirmed it. Then I checked somewhere else just to double check. But it just gives you a faster way to do things. And I would say, you asked the question about, does it make our jobs easier or harder? I don't know. I can't think of a way where it's been harder, but I think it's made parts of the job easier, so then you can focus on those higher value areas. And I think that's what we all want to do.
And the higher value is I would guess, this is just from my perspective, is actually working on behalf of the client. It's not sitting doing all the paperwork. It's actually activating and finding initiatives that help your clients grow or expand their portfolios.
That's right. And technology can help that as well by providing, for example, we have an investment portal so they can see their investments and get some information, more information that they couldn't get before without calling us, and then taking a bit of a lag. So I think there's definitely been some benefits. And you're right. Technology has allowed us to serve our clients better.
So let's unpack that a little. I want to better understand QV and the large clients and how serving these clients, how does that work within QV? What separates you in how you attract clients, serve clients, and grow clients? How do you guys do that differently than others?
So the one thing I've learned over the years is there's many different ways to manage money. So at QV, the Q and V stands for quality and value, and that's what we look for in our investments. And so for us, when somebody comes to us, they need to be aligned with what we're looking for. They need to feel that the quality and value of investments is critical. We have an investment philosophy that we feel is the optimal way to manage money for the long term. And so when we look at how are we different, I think everybody on this podcast would know is we have the banks. Banks have a very large part of the investment market, and they manage money for people. And the one thing that's different between depending on which part of the bank is, are you dealing with one person or are you dealing with a team of people? At QV Investors, we have a team of people that we manage all of our money in-house. So we make the decisions based on research we're doing. So that's unique from some other organizations. All of us, or many of us, I should say, are shareholders of the firm. So we're fully independent. We don't have somebody that's saying, hey, you should be selling this product or that product. We're doing what we think is best for our clients. And I think one thing is, I always like the phrase where somebody says, okay, well, I think you should invest here. And they ask, well, where's your money? Well, whoa, my money's way over here. All of us are investing alongside of our clients. So if you took a look at many of us, including myself at QV, all of our assets outside of our real estate are in the same funds that our clients are invested in, because we feel that the way that we manage money in our process provides strong downside protection, but does also create that growth that we're looking for over time. So the differentiation is really that independent, we eat our own cooking, as we like to say, and we are doing that research and we're making those selections in-house. And if somebody aligns with our philosophy of investing, then it's a very good fit.
I love when I hear somebody who's in a leadership space and in a community cultivating space. And that's really when we're talking money at this scale. It literally, it builds community from up here all the way down through. Like, that's money moves in, it doesn't move only one direction, it moves every direction. It says one thing here, works over here. And I love when I hear somebody say they are, their core values align with what they're speaking. That's awesome. Let's talk a little bit about the core values and what you're doing for charity. You had mentioned on just one of them, and then I want you to expand on this, is how you donate a percentage of profits back to the nonprofit sector that you work with. Can you expand a little bit into a few of those and what you do within that space?
Sure. I'd like to break it down maybe into a few different elements. So the first element is when I joined QV, that was always, so as I said, over 20 years ago, but it's been since the inception of the firm, is donating a percentage to community areas in the community that we feel strongly about. And really those areas have been places like the Calgary Food Bank, or an organization called Momentum, or Kids Cancer Care. So areas that we're very passionate about. So the first one is at the overall firm level. The second area I'd like to talk about is just the those clients that are with us that are nonprofits, taking a bit of the fees that they pay us and giving it back to them in terms of a donation. The third is we want to make sure that people at the firm feel that they also have a voice in where the money is going. And so we have an employee allocation. So each person is allocated a certain amount, and tell us where you think the money should go. There's some guardrails around it, so it's aligned with the overall vision of QV. And then I'd say the fourth one is really encouraging people to be out in the community and making connections with organizations that they're passionate about. And I think a few of us here at QV, including myself, are aligned with organizations that you don't go there because you feel you have to. You go there because you want to help, and you think it's a really important segment of the community.
Done a lot of work with the food bank. I've done at a very community level. What I don't think people understand is the sheer volume that a lot of these organizations are serving. And I may raise, 5,000 pounds in groceries through an event, but to be able to raise $500,000, that's where the operation and the continuation of that service comes from. That is incredible. And again, paying it back to creating that environment of support and continuation of the core values. You know your money's being well spent, well invested if you have very centered individuals running it, and that having that 35. And I just wrote this down. I want to point that out. I would work for somebody that said once a year, here, thank you for doing an amazing job. Here's your portion. Invest it wisely. Even if there's, pets or something like that. But yeah. Exactly. That is amazing. And that is something that I want everybody out there who has been blessed with the opportunity to lead a large scale organization. If you take something away, that is powerful. Empowering your employees to further the conversation around supporting the communities. You also work with the Special Olympics. That is amazing. And then you said 15 years in alignment with having your daughter, the dad and daughter dance that you guys, and you forgot all the moves, but you could still show up.
Yes, the dad and daughter gala is held every October. And so it's raising money for kids' cancer care. So it's one of the hottest tickets in town. And so one thing that's always come up is, when is there going to be a mom and son dance or a gala? And somebody asked me, well, then if you could organize it, then it could definitely happen. Yeah. But that, as you can imagine, those galas take a lot of work. Yeah. But they are raising money for some pretty important organizations. Absolutely.
And I know for the daughter or the son and mother dance, both of my sons would be looking at each other going, you're taking her. That could be part of it.
And the opposite happens. We have employees that have two daughters, and they have to fight over who's going to go, which makes it a bit difficult.
See, then you have to alternate the years.
You have to alternate.
Yeah. Or they need to step up and organize another one. Because as you said, it's a hot ticket, so why not two? Let's talk a little bit around where you see the future and the journey of QV, the growth across North American markets, across North American investors. Where do you want to take this as the head of the realm or with your team?
So maybe I'll answer it in two ways. First way, we'll talk about QV as a firm, and then we'll talk about QV as an investor. So QV as a firm, one of the key things we've been looking at is, and this is with all businesses, you want to grow. The areas that we're focused on are two sides of our business. One is investment, private investors investing at QV. And that's in our wealth management business. It's continued to grow, and we want that to continue. So that's helping people be able to finance that future they're looking for, also to help finance that philanthropy, so they're giving back to their community. So there's lots of benefits for the individual, but also for the community as well. So we'd like to continue that part. And the other part, we manage money for pension funds, for foundations and endowments, and we would like to continue to grow that business. So that business is a combination of public fixed income and public equities, both Canadian and global. So that's the firm itself. Now, if we're taking a look at markets in general, I think for us, we have a strategy, that quality and value strategy. We have our 7 tests that we focus on in terms of the investments we're looking at. And we also have a focus on risk management. So trying to ensure that when we're taking positions in companies, that we're looking at, what is the potential downside, and ensuring that we are managing for a variety of different environments. I think the biggest thing that is being talked about recently is the uncertainty in the market. And that's
how do if you haven't been in this space before, which a lot of our 30 and 40-year-olds have never been in an uncertain market. In fact, I don't think we've seen anything quite like this since probably the early 80s, when we had the whole shakeup around, or the mid 80s, around oil and energies, and we saw the interest rates go up to 20% here and things like that. So we haven't seen that. How does somebody feel secure when they don't perceive security?
So I think I just, your comments are interesting, and I think everybody has a different perspective. So you brought up the 80s, and the people that are 30 and 40-year-old will go, I've been through this. I lived through a pandemic. And other people go, well, I've been around and I remember the tech bubble, or I remember the great financial crisis. So I think all of us, there's that thing in our mind where we remember things were really bad. This happened, imagine if that happens again. And I think the biggest thing for us is to understand in investing, there's always uncertainty. We never know what is going to happen in a political environment, an economic environment. Is it an environmental disaster, pandemic, human disaster? I think the biggest thing that we need to understand is we won't know exactly what's going to happen. So we need to prepare for all environments, because if we try to invest just based on this is going to happen, it's probably not going to happen. There's going to be some nuance to it that's going to create some issues.
Is there also some education around reorientating people's mindset from quick cash to long-term investing? Yes.
So unfortunately, I've always looked, when I was younger, I think one of the main things you look for is, how do I buy that house I'm looking for? Or how do I finance that car because I really want it? And you're looking for something that can happen quickly. Unfortunately, investing is a long-term game. And so that's the one thing that we also try to focus on is we can't focus on what we can't control what the market's going to do. All we can control is what we're investing in. So the way we operate at QV is we're trying to look at those types of businesses, and many companies will do this. Well, you're not going to be looking for bad companies. We're all looking for good companies. But what we do specifically at QV is looking for those businesses that have a franchise that's defendable, and they earn profits in a way that's hard to replicate. One thing that we all know is you can't go bankrupt if you don't have any debt. And so if you have a well-financed balance sheet, that really protects you. So there's many companies out there that would have some of those characteristics, but it's also really important what you pay. And so for us, valuation, that V in our name, is really important as well, to ensure that you're paying what you think is a reasonable price for something. And one thing that many legendary investors talk about is you don't know if the valuation or the stock price is going to change next week or next month. But if you buy a company and you wait 5 years, if it's a very solid business, over time it will compound and grow over time. So if you say, what stock should I buy for the next 3 months because I want to make some quick money? We really don't know. And it's difficult if somebody says they do know, because I don't know if they do. They think they do, but if you would have said in February of 2020, I think we should do this, everything was down. Canadian market was down 30% within a couple of weeks. And so that quick money that you're making didn't turn out the way it was. So there's lots of social media is full of people trying to make, trying to provide investment advice. I think the key is this is your money. This is money you've worked really hard for. And unfortunately, there's lots of stats out there that say that, people work, 2,000, 2,500 hours a month, and they spend 2 hours on their finances. I think it'd be important to really look at, do I want to do this, and how do I grow this for the long term and focus on the long term?
Warren Buffett talks about his first company he invested in, which was an older woman, grandmother age, whatever that was back in the 30s, 40s. His very first company was a carpet company, the most unsexy company you could invest in. It wasn't a large-scale investment, but it was a seed for everything he built. So when we're looking at, you mentioned social media, you mentioned all of these things, and I always look at how I believe that HGTV had a direct impact on how we think about home ownership, right? I always view it as keep the first property, take the equity, buy the second property, and that's what I always encourage. I talked myself out of so many listings, it's not even funny. With a team of 35, you touched on something, perception. We all operate through a lens of perception. With a team of 35, when people work with you, you spoke about having that team working in a cohesive space, helping to guide both the companies you represent and the investors you represent. How do you believe that team perception helps navigate all these in the market?
It's an interesting balance. And so one of our key values is accountability. And so we need to have portfolio managers that are accountable for the decisions they make within each of their funds, so which companies are buying and what those holdings, what weights they are. But I think the team approach is really important. So we have an investment committee that meets at least every Thursday. We call it our committee of sober second thought. So I come to the table and I recommend that we should go into a business. And the goal of that committee is for people to poke holes in it. And not from a negative standpoint, but to understand, have you considered all the potential risks? And the great thing about it is we manage fixed income. We manage global equity. We have people that have been at our firm for 20 years and people have been there for 4. And I think that diversity of opinion and diversity of background allows people to look at a particular investment. And the key for us is putting that investment on the table. It's not my investment now. Now it's the committee's investment to look at and see, is that the best investment? And somebody may bring up a thought of, I invested in a company that looked like that, and I had this issue come up. Have you considered that? And if you haven't, then you can go back and consider it. If you have, you can talk about why you think that risk is maybe less so than some others. So I think having a group of individuals, because and also having a process around investing. So I've heard examples of people. People wake up in the morning and they didn't have a good sleep, and the kids were crying, and they decide to sell something.
Yeah.
That's not how it operates at a firm like ours and most investment firms, where you have a group of investment professionals, not an individual, but a group of investment professionals. Is that you're sitting at the table a day before that investment committee. We've sent out the idea for every investor to read it. But back before that, we were doing research and writing out why we thought. And it's, again, on our 7 tests: management, financial record, their franchise, to ensure, and a few others, to ensure that we've really considered this. And remember that this is the pension fund of individuals. This is money that people have saved their whole lives for. We need to ensure that we're doing that proper due diligence to ensure that this is the best investment, because maybe it's not. Maybe it's something else. And so the accountability says that we're going to have that discussion. The portfolio manager can make that decision. But there is a veto from our chief investment officer that's rarely used because our process is pretty well defined.
When should a person start investing?
They should start, I think their parents should start investing for them the day they are born. And so I think the day they're born or the day after, they get a social insurance number, and they open up an RESP and they start investing for them so that they can help pay for university. So that's number one. And why I think that's really important is if you put money in, the government matches. It's free money. And so I think that's the first step. And then the next step is when there's additional capital. And so it's difficult. Everybody's in different stages and people are in different environments. And so if you're scraping things together to pay for university and food, or college and food, or just food in general, if you're not going to school, there isn't much to save. But ideally, if you can just scrape off a little bit, there's books out there that say if you can scrape off 5 or 10% and just put that away each month. Or the one I like is if you've lived on X and then you get a raise, if you can still try to live on X and put the remainder away. So I think investing, compounding is the most powerful, and Warren Buffett will say this as well, as one of the most powerful things out there. So if you can, the earlier you start, the more compounding you have and the ability you have to generate capital. But I think the biggest thing starting early is really important, but not making mistakes is also very important.
And that's where, working with you, working with QV, working with people who have that sober second thought to help guide is where, because you see a lot of this, we were speaking the other day about doing wills, and you could just go and get a will kit, but does it really do what you need to do when you croak, right?
That's right.
It's the same here, isn't it? Because there's a lot of things you hear ads, don't pay, don't do this, don't do that. But I'm wondering if that's that fast cash mentality, right? Not really understanding how the money is made.
So I would totally agree, and I think having a professional, our investment counselors are individuals that are required by their registration to put their clients first before them. So that's number one. We want to make sure that their best interests are taken care of. But I think when we talk about how a professional can help, there's been some interesting studies that show that if you work with an advisor, you can pay for the advisor's fees 3 times over by them helping you. And what's really interesting,
the growth of,
actually not by the growth, so that's part of it.
Okay.
So our fees are 1%. For somebody investing with us. But the studies show you can make 2 to 3 times that working with an advisor, professional advisor. And there's a number of reasons. One, how they do your asset allocation. So how much in stocks, how much in bonds. The biggest piece though is behavioral coaching. Pandemic hits, as an example, you call and go, oh my God, the world's coming to an end. Get me into cash, put it all away so I'm safe. And we just say, why don't you just sit for a little bit? Why don't we just see how this is going to go? We're invested in very high quality businesses. These businesses aren't are you still going to buy shampoo? Are you still going to drive your car? These types of things. So it's really, and it's just a conversation. It's a conversation to ensure that we talk about, and we should have talked about this before, that's our role, is how much risk are you willing to take? And also, are you on your plan? So we do goals-based planning. So if you said, this is how much money I have, this is what I'd like to do, and you call and say, I want to sell everything, but we have a plan. This is the plan that we want to continue with. So, markets go up and down. We talked about that when you first joined as a client. So I think that behavioral coaching is critical to ensure that people don't make mistakes. Because if you're sitting on your own, watching the news and seeing these news feeds, you can get pretty freaked out pretty fast.
Oh yeah, I actually have removed my social media feeds from my phone. So everything I do is now very intentional, because that kind of, and I think a lot of people are feeling that whole whiplash effect. So having yourself, your team come in with very calm, steady, future forward, let's follow the path. This is a path that works, and just stay with it. I think it's kind of actually a relief to know that the world may appear to be on fire over here, but at least this is taken care of.
And I think I agree, and I think to use some examples, because we talked about the pandemic, there's going to be companies that don't make it through tough times. And I think that's where the analysis of companies and ensuring that companies have well-financed balance sheets, they can take tough markets. That's what we're looking for.
So let's talk tough markets and tough things. And this is going to be an odd question, but this is something I'm hearing a lot of at my age and female. We are running now into an era of the highest wealth transference from male to female ever recorded. And a lot of these women now are sitting on these substantial amounts of money that they've never navigated before. What would be, if I came to you, what would be some of the things? And I said, I have, I was left, we've got his shares from his company. We've got this over here. We've got this. And it comes to, like, some of these women are walking into personal wealth of $6, $7, $8, $10 million that they've never had before. What are opportunities that these women can ensure that not only are they living comfortably as they move forward with that money, but over a 20, 30-year period, that money can grow and become something for their children and grandchildren that can actually create a legacy?
Yeah, so I think the main thing that we need to talk about is, let's not do anything drastic. Let's sit on our hands and let's just take let's look at what's out there and let's talk to some advisors. And so if you came to us, what we would say is, okay, well, who are your advisors now? Who's your, who do you do your will with? Where is your money currently being invested? How well is, do you know that person and your relationship? And then really get a sense of what are the goals? Because there's, as you know, everybody has different goals. There's some people that say, I'd like to buy my kids houses. And there's other people that say, that's the last thing I'm going to do. So I think just sitting down and trying to get a sense of what is it that you want to do? And that's where that goals-based planning comes in. You have a certain dollar amount. If somebody's sitting on that kind of money, it's likely that they won't spend it all. It's likely they're not going to spend it all. So really it's a plan about how much are we going to spend now? How are we going to invest it for the future? And what's the end game here? Is it philanthropy? Is it to the kids? Is it those types of things? So I think the really important thing is to ensure that you have people you can trust around you and people that have your best interest at heart. And so those professionals that you can sit down with and know that they are looking for they have a fiduciary duty to ensure that your interests are put first, and then develop a plan. And usually the plan is going to involve, it's not going to just be us. Yeah. We can do financial plans. We can invest money for people with their goals in mind. But we're going to need specialists. We're going to need lawyers and accountants and others to help guide.
Takes a team.
Correct.
Takes a team.
And we would work with the team.
So, and speaking of like building a community, so you're here at the Petroleum Club, the Calgary Petroleum Club, and let's talk a little bit about your membership, how you leverage this, how you partner within the club to be able to, I want to circle back around to that teacher in 10th grade of economics, what you learned, that valuable insight of sharing knowledge and how you bring that, you go out of your way very quietly to have a coffee with people who are just literally on the first steps of their great journey, right? And that I just think, goosebumps. I just think what you're doing is phenomenal. And yet you're taking it yet another step by being part of a community, because you don't have to be part of anything. You are a community in yourself. So by bringing it here into the Calgary Petroleum Club, tell us a little bit about how you engage within the club, some of the different classes or conferences or speaking opportunities, or even just the things you like to come to.
Sure. So lots in there. Let's start with how do we use it as a firm? And so QV has been a member for a few years. The way that we use the club is we hold events here. So it's a nice central location for, we have many professional clients. They're out in the towers around here, so they can walk over and we can do a meeting, for example, at lunch, where we've done meetings about wills and estates or things like that for existing clients and potentially new clients. So that's one area. The other one, I've been here for numerous breakfasts put on by one of the brokerage firms here in town to learn about energy, natural gas, and oil markets. So we've used it, other people putting on events. We also use it in terms of our internal meetings. So sometimes, not sometimes, every time we do an offsite, it's here. And we do it here because it's quiet and we can go into a room and we don't have people knocking on the door saying, oh, it's really important. We want to focus on for the whole day from 8 to 4.
That's the downside of the team. That's the downside. Oh, by the way, remember when?
Yeah, we're not here. We're not available. So 8 to 4, we're in one of these rooms and we're having conversations about the strategic direction of our firm. And then we've also had, we just had lunch, at the Thursday lunch we've got together, and that's been good just to socialize. And then in terms of the coffees, the last thing that I'll bring up, I think, I had somebody when I started out, I was in the co-op program, and this person is a senior individual at one of the big banks here. And I phoned that individual and they took my call and gave me some career advice. And so that really helped me. And so I think it's important for people. They're just looking for help. The biggest question I get is, I want to get in the investment business. I don't have any experience, but nobody will hire me to get experience. And I think the biggest thing that I suggest to people is just get close to the investment business. Banks are close, accounting firms. There's other companies out there that have similar type environments that eventually you can find your way into it.
Building a better tomorrow. That's just like everything I hear you saying. I really feel like that is truly an underlying almost mantra of that. Just putting it in place to build better, be the best you can. And I know that sounds, I think that's a military quote or something, but not a lot of people live their life that way. And not everyone runs their business that way. And it's incredibly refreshing to sit here and chat with you, Darren, because you're dealing with people's lives and the legacy of their lives. And you're putting those catches in there, that sober second thought, and you're really taking time, and I really appreciate that.
Well, thank you. I think the biggest thing for us is, I hear what you're saying about going forward. I think the one thing that I'm going to keep bringing up our values is excellence, continuous improvement. And so that was something our founder, Lee Pullen, talked about a lot, was ensuring that we are continuing to improve, learn from our mistakes, and continue and try to do things better. And so a lot of the things that we have at the firm now have been in place for many years, and we've just continued that legacy going forward.
Have I missed anything? Have we touched on enough that you feel like the story is set, the door is open? Have we kind of captured everything?
We have, but I think there's just one thing that I'd want
Perfect.
to touch on. And this one thing is, we talked a little bit about it in terms of the having a professional advisor. And I think the biggest, one of the biggest mistakes people can make is selling at the bottom, or making mistakes and selling at the bottom, and then I'll get back in when things are clear. When things are clear, investments are going to be much higher.
Yeah.
And so I think the important thing is preparation for downturns should be done well before a downturn. And I think that's one of the most important things is, understanding how do you feel in certain situations, and really getting a sense of, can I take this type of risk? What happens when the market goes down 20%? Do I freak out, or do I go, it's probably getting cheaper, I should put more money in? And everybody's different. And I think just knowing yourself and how you act, and whether it's an individual or whether it's a corporation or a pension plan, I think just ensuring how you react, but then also invest it in a way that is aligned with what you think. So, for me, downside protection is important. Everybody likes to, when the market goes up, but we know from research that when the market goes down, it's much more painful. It's twice as painful as when the market goes up. So just understanding those things so that mistakes aren't made at the wrong time. And
so where can we find you? What is the website? Do you have resources available or anything that can, because there is a level of psychology in this, and just being able to weather the ups and downs, right? You're not spending like a drunken sailor when it goes up, but you're also not, fleeing the ship when maybe it's a matchstick and not the entire ship is on fire.
That's right.
What do you have? Where can we find you?
So QV Investors is on LinkedIn, but also on our website. You can find us. And one document that we find useful for people just to look at is 7 questions to ask your advisor. So that's something that can be downloaded. And I think the best thing about that is this is a piece that's really for you to ask your advisor, so you get more information and ensure that you're comfortable. The one thing that you had talked about is, somebody that has recently come into a bunch of money. That's a scary thing. And we were just speaking with our marketing company yesterday, and apparently from their stats, they're saying 80% of people in that situation leave their advisor and go somewhere else. And so they're looking for a new home. And I think that, asking those 7 questions could be useful to go, is this the person for me, or is that the person for me?
Brilliant. And again, it's the whole psychology of the financial responsibility. We're transferring, like I said, we are in the midst of this really crazy time. Like, I don't think since like the invention of the industrial age, like when we were able to turn on a light, have we been in such a time of opportunity, but also a time of change. So, and a lot of these women, and like I said, this is something I'm personally witnessing. And they didn't even have the name. They never even met with the person. They don't understand. Like, if you landed that on my pocket, in my lap, my husband's navigated that my entire life. I've 30 years of marriage. He's navigated that. Sometimes not the best, but he's navigated it. But he's like, my husband's like me, ADHD. Oh, I got an idea. So I understand this. I understand all the moving parts and stuff. But as somebody who's never navigated our personal finances, and I'm just learning, I've had the opportunity to go to a lot of different classes, and I didn't come from wealth. And I think that has a lot of it also. And I think we're in a time where wealth is true opportunity through information and finance.
And I think you've highlighted something we haven't talked about, which is if you are man or woman and you're not the one managing the investments, start going to the meetings. I think it's really important to ensure that you know where it is. So if something happens, you know who to call. Yep. But then also you have an idea of, what was the plan? And do I agree with the plan? Do I like the plan? Is it too risky? And then if something happens, then you kind of have that knowledge already, because 30 years of going to a meeting a couple times a year, you would have picked up a lot of information, and it would be helpful, because there is that what do I do?
And there's a lot of opportunities right here at the club, because I know that there's a lot of wealth investment, just understanding legal meetings. There's a lot of talks here at the club that can help. I know a lot of people experience, money is one of those things that people carry a lot of psychological thoughts. They carry a lot of thoughts that could be impressioned from their youth, from their marriage, from their job. But you got to start somewhere, and no question is a dumb question, right?
That's correct.
Thank you. So I haven't asked any dumb questions today. Thank you, Darren. Oh, I feel better. Awesome. Because this was incredibly insightful for me. I appreciate your time.
Well, I really appreciate the opportunity. It was great meeting you.
Thank you for joining us today on the Back to Business podcast. Be sure to visit calpeteclub.com, calpeteclub.com, to find out more about upcoming events, networking opportunities, and membership. If you are not already a valued member at the CPC, where we are proudly connecting and supporting Calgary's business leaders.